I asked him not to embarrass me, but thanks everyone. Thanks for your time. I walked around campus a little bit. It's a beautiful place. You know, the challenge with living in a beautiful place or dealing with beautiful things is you start to not see them after a while. They become part of your everyday life. I walk out my back door every day and I say, I can't freaking believe I live here. And my kids walk out the back door and go, oh, I live here. And it's hard to instill that into people who are your age. And my kids are a couple years older than you. So I thought a lot about today and what to say. I'm very accustomed to talking to people more in my age group who have an industry background and are further along in their lives. So you're closer to my kids' age than to my age. My kids are 22 and 26. And I talk to them a lot. I don't think they listen, but I certainly talk a lot. And one of the things I realized after listening to them and talking to other people who have been to, whether it's Webb or Kings Point or actually any other college, is that what's hard to get a grasp on when you're in your age group is, and I wish I had had it, and it ends up it's impossible to have it, is to have a better feel for how the parts in your industry or your chosen field fit together. It just takes time and it takes exposure. When I went to Kings Point, I thought two things. I want to go to sea and get a captain's license, and I want to run a shipping company. I had no idea what that meant, but I knew I wanted to do it. I had a lot of conviction. That's why I only applied to a couple of schools, Kings Point and Fort Schuyler. But I was naive, I was idealistic, and I was driven, but I just didn't know. So, for example, when it comes to shipping, we learned a little bit about legal stuff at Kings Point, but I had no idea. I thought there was a lawyer, and that's it. But under the legal umbrella, there's corporate law, there's finance, there's litigation, there's contracts, there's seamen's rights. There are all these things that I had no concept of that come together to help form a shipping company. Or if you look at ship brokerages, I didn't know there was a ship brokerage system. And you may wonder, how does this relate to Webb Institute? And I'll tell you in a second. But under ship brokerage, there are time charter brokers, there are sale and purchase brokers, there are new building brokers. I mean, there are, within a company, there'll be people who specialize in seamen's rights and personnel. Also in the industry, there are registries. I knew ships are registered somewhere, but I thought it was like you go to the DMV and register your ship. Actually, the registry itself is a business. Liberia doesn't register ships. It's a bunch of businessmen or lawyers in New York who went to Liberia and said, hey, Mr. Liberia, we're going to do a ships registry. You want to be involved? And we'll write the laws, we'll do all the work, we'll give you half the money. And it's a great business model, but I had no idea. So as I pictured myself running a shipping company, I pictured I'd be behind a big desk and big boards with ships running around and people doing what I told them. But that's not where I ended up. As a matter of fact, I spent a couple years at sea and I was kind of bored. I mean, the old saying, going to sea is like being in jail with the additional opportunity of drowning. You never heard that? So my goal today is to tell you why I've stayed in this business for a long period of time. I know a lot of you don't stay per se in shipping, but in related fields. But this is my chosen field, and it's Paolo's. So I gave a talk last year to the Norwegian American/Hellenic American Chambers of Commerce, and I gave a good talk. And I've been asked specifically about why I stayed in shipping. As Paolo said, we've sold all our ships, so I can take a pause and figure out what I want to do. And I gave it a lot of thought. So I gave this talk last year, and there's an 8-minute clip that I think is appropriate, and I worked really hard on it. And people my age have asked to show it to people your age, so I thought I'd show you that. And then I would tell you why I work with private equity, what is private equity, and how that fit into my life and my ultimate goal, which changed over time. And before I go into that, Paolo, which I didn't plan on telling this story, but I like to tell stories. Paolo mentioned the Suez story. So when I talk, I'm going to talk about how my business works. When I say my business, I mean the private equity business of shipping. And I'll talk about how it's fragmented, how I spend a lot of time traveling around the world and talking to other ship owners and getting to know people. And it's a very important aspect of what we do. One of Paolo's previous partners is a guy named Ted Kalborg I've known since 86, 85. But the Suez story is we had, and I don't know how much you guys know about the details of various ships, so excuse me if I make it simple. Suezmax tankers are about 160,000 deadweight tons. And it was a few years ago when the market was really bad, and no one had any money. And there were some tax partnerships in Germany that were in trouble, which I knew because I spent a lot of time traveling to Germany and other places. And I went to see this one tax partnership, and I said, you have 4 Suezes, and they're due for special survey, which is going to be $3-4 million bucks. So I'll tell you what, I can raise the money to buy 2 of these. I need 90 days to do it. Now, you'll see the volatility in the business later on, and the volatility is really, really large, so people don't like to tie up their assets for a long period of time. But these guys were in trouble, and they knew my reputation of being able to raise money. They said, okay, you have 90 days to raise money to buy those 2. I said, now I want an option to buy the next 2 if I conclude the first 2. And they said, okay. So I had a really good deal, I thought, because the market was really bad. And optionality on the upside is everything in this business. So I went out, knocked on a lot of doors of people I knew, and I raised the money. And I was supposed to lodge a big deposit the next week. And Friday afternoon, the major investor calls me, and he goes, well, we have a little problem. I think it'll be okay. I said, what's that? He goes, well, our senior partner is heavily invested in Argentina. And I'm like, oh, that's not my problem. And he goes, well, kind of is, because the Argentinian stock market fell in half in 24 hours, and he's really exposed, and let's see what happens. So I knew I was in trouble. So I'm like, shoot, I signed for these things. And in our business, you don't always get a contract to deliver the money right away. And I knew this guy. I'm like, all right. So I was panicked because I didn't have $40 million bucks sitting around to buy these 2 ships. Not that week anyway. And so what am I going to do? So the first thing I did was call Ted, who works at Apollo. I said, Ted, I'm jammed. This is a really good deal. Can you help me? And he said, I'll take 1 ship with an option for another. I'll call you back in 24 hours. So it's a $20 million obligation. He called me back in 24 hours, and he said, okay, we'll do it. Remember? Yeah. I have to do all the work. You have to do all the work. And then I called, I said, okay, I got to buy the other one. So I called the lender I know. He was in Turkey. He was getting on an airplane. It was Northern Nav. It was the Dutchman. He said, okay, I'm taking off from Turkey. I'll call you back when I land. So he's on the plane in Turkey. He dopes it all out. He goes, here's the deal. I'll have it approved Sunday before business opens. And he let me a big chunk of the money. I called an investor friend of mine who had a few dollars to put up. And then I called a ship, Navigate, who charters in a bunch of ships. I called Navigate, who I've done business with before, on Friday night. I said, I got to get rid of this ship. He says, meet in your office Saturday morning. And he signed a time charter contract Saturday by noon to charter the ship at a very good rate for me. And he wanted some options. So I laid the entire risk off before business opened Monday. And it was basically through knowing a lot of people in a really fragmented, volatile business who can see a good deal, because it was a good deal, who can move quickly, who know that I've had the reputation of performing. And that's the fun part of our business. And ironically, everyone made a lot of money in that business, in that deal, except me. But I got rid of the liability, and that was the important thing. So now I'm going to show you a short clip of why I like my business. And I know you guys look at a lot of different sectors. So this is a little bit self-serving, but that's the way it goes. I'm at the front of the room.
No,
So press
on your mouse.
on my mouse.
Up arrow on the keyboard.
Okay, we obviously didn't go through this beforehand.
There.
And then
Play on the screen.
there. And now what?
Your mouse could play on the screen. You should be good to go.
Display setting
Or
play.
the bottom.
I just don't want to hit delete. Here we go. Yeah, I'm sorry. Yeah.
When I attend luncheon functions, I personally don't like it when the speakers are.
Can you hear it?
Everybody wants the opportunity to lead. So, and up front, I can't use my phone anymore, so if anybody wants to skedaddle, that's your choice. I won't take it personally, trust me. But if you do stay, I promise that I'll be relatively brief. A couple jokes. It's a feel-good speech. The ESG guild team. No carbon consumption guilt. Not for Bob Burke. When Brian Lee asked me to speak, I asked him, what topic would they like me to talk about? And I said, well, talk about anything you want. Which is difficult. It's like when my wife asked me what I want for dinner, and I say, whatever you want to cook. And she immediately said, or wherever you want to take me. So I thought I'd talk about my favorite topic, which would be meat. Sorry. But why not? With all the Ridgebury ships gone, I have to make some decisions. I wouldn't call it a crossroads because I'm over 60 by a few years, and maybe I have to decide if I'm going to want to stand by or find some some new pursuit. Maybe it's a fork in the road, but I have to make some decisions. Basically, I have to decide if I'm going to go climb a mountain, sit on the beach, explore more of the world, or as the Clash likes to say, the Clash song says, should I stay or should I go? As it turns out, I have friends outside this industry, and almost to a man by the time they're my age, they don't like the business anymore. They're tired of it. They're tired of real estate. They're tired of this. They're tired of that, and they look forward to paying it up in some set number of years. Not many of them stay around as long as Clyde has and actually enjoy themselves. That's a compliment, Clyde. Believe me. So I began to question myself. I questioned my career. Why have I been in this business my entire life? We all know the long-term financial results in this industry are rather dismal despite today's euphoria. We have zero control over the revenues, none. We're all price takers. We have many, many, many years of misery followed by a couple of few years of complete euphoria, which we're experiencing right now in most sectors. Our public image is basically rotten. I think I'm not embarrassed, but when I tell people I'm in shipping or oil tankers, they give me a funny look. We're only in the press for really bad events. So why haven't we all gravitated into something more respectable like, I don't know, tech, real estate, banking, some other industry? What is it about this industry, our industry, that keeps us coming back for more? People are stuck here forever. So in order to find out some real answers, I did a real deep dive, which for me basically means texting all of my friends, or as many as I could in 30 minutes, and asking them why they leave. And I got a lot of answers, and everyone came back very quickly. I asked them, what are their top reasons for sticking around in this business? There were a lot of real thoughtful responses, some real insight, which I'll get to in a few minutes. But I think first I went to some more entertaining remarks from a variety of people across the spectrum of age and disciplines. Here they are. We were allowed to leave. I didn't know that. Now they tell me. So, from a broker, 2 words: Macedonia, nor shipping. From an owner, it feeds my gambling addiction. Drinking and more drinking. The industry-wide bottomless pit of optimism. In just 6 months, rates will soar. That came from a lot of people, same sort of concept. From an owner, years of boredom, punctuated by episodes of sheer terror, interrupted by moments of bliss. From a banker, of course, the deeply rooted masochistic tendencies of the players. From another broker, well, if I was a banker or a lawyer, I couldn't call my client at jackass in the morning and close a deal with them in the afternoon. And that's the cleanup version, believe me. From a charterer, when I lose a good row with my wife in the morning, then I am all warmed up for negotiations with Greek when I get to the office. Don't take offense to this one, because the average IQ in the room makes me feel smart. One of my favorites: great people and horrible rogues, and horrible people we choose to ignore. Big egos get to play with big toys. Big things are really cool. Big things that move a lot of crap around the world are even cooler. From a newbie, I got sucked into the romance. I stayed for the drama. Now I'm addicted. We get to talk to crazy people, many of whom are smart. And my favorite is from my business partner, Hugh Crooks. You can outsource everything in this industry, even the speech, and take all the credit. Thanks, Crooks. Now for the insightful comments that I promised earlier on. First, I can report that people really, really like this business. Nobody regretted it. Nobody said, why am I here? People are really positive. Almost everyone mentioned people and the international aspect. But in reality, they're combined. You can't have one without the other in our industry. Top mention was the camaraderie, the banter, the characters, the lifelong friendships across continents, cultures, religions, wars, international crises, and pandemics, natural disasters. Hearing, knowing, and listening from completely different perspectives across the globe from people we know personally on a daily basis. Having a first row seat on world events, every day, every week, all life long. Real diversity, not some silly acronym or initials or rules from an HR handbook. Real understanding and acceptance of the rest of the world and our own role in it, our own industry's role, and the role of our own country, and the role of other countries, as expressed to us by people we know personally over decades, and whom we grown to respect over time. In our business, we all knew the meaning of Ramadan, Chinese New Year's, Orthodox Christmas, the Golden Week, and numerous other holidays, national holidays and religious holidays across the globe, well before DEI was thought of or cool. We actually live international lives. We get our news from people we know, not from the BBC, not from CNN, not filtered through Fox, not distorted through Al Jazeera or the Chinese government or any other media. It turns out that a good many of us came from modest backgrounds. In our wildest dreams, we could not have anticipated the experiences that this industry has provided us. I can hear in people's voices 2, 3, 4, in Morton's case, 5 or 6 decades later. Glad you don't laugh too hard. How they were completely dumbfounded to find themselves in London, Tokyo, Shanghai, Sao Paulo, Singapore, or anywhere in the entire world when they were 20-nothing years old. As one guy said, at the age of 25 years old, I found myself in the Dorchester in London negotiating with the Greek ship owner. How did this happen to me? That was me. Some of us have experienced the world starting as a cadet at sea, then graduated seeing the world as maybe a superintendent, or a charter manager, or a CEO. Today's Gen Z often says, oh yeah, I did Amsterdam, or I did Paris. We don't do cities or countries. Traveling the world is part of our lives, and speaking to people around the world on a daily basis is part of our lives. It's what we are, and it's what we do. Even today, I find it pretty cool to be traveling through the airport lounge, the Cathay Pacific in Hong Kong, and run into a friend of mine from London who's going into China, and I'm headed down to Singapore. I still think that's cool. So, I think I'm going to stay in shipping. Where else am I going to go? Real estate? I mean, how terribly boring. Their rates and values don't drop 100 or 200% a year. Who would want that? No revolutions or wars are going to trap your assets on Fleet Street in London. There are no Houthi rebels lobbing bombs into the middle of Copenhagen. No Somali pirates taking over the Chrysler building this week. Buildings don't collide or sink. During the pandemic, they actually let your people out of the building when they're sick and get to the hospital. So no, I'll stay here in a little understood but terribly exciting and rewarding shipping industry, where I can hang around with all of you and enjoy our world from a vantage point understood by few, but fully appreciated by those few lucky ones of us who can be here today. Thanks.
Does it shut off?
Yes,
Yeah, okay.
please click.
What did I do? Thanks. All right, that's my sales pitch. Best I can do. But I have loved this industry, and the one thing that sticks in my head is I know a lot of lawyers and other people in other sectors, other businesses my age who have just had it, and everyone I know my age does still enjoy it. So now I'm going to talk to you about what I actually do for a living these days and how I got there. Slide. If this goes.
Down arrow on the
Keyboard
keyboard.
arrow.
Down.
No.
One more time.
There. Okay. So what is private equity? First, just 2 minutes about how I got here. As Paolo said, my family's been in shipping on both sides for a long, long time. So I thought I wanted to run a shipping company. After I went to sea for a little bit, I went to business school right here in New York at Columbia, and I learned a bunch there. But more importantly, when I finished, I worked for a U.S. flag shipping company called Marine Transport Lines. And there's one guy there named Jim Rand, who was the CEO, and I worked for him. And he really taught me how to do a deal. He taught me anything is possible. It's a capital-intensive business. You need to know people, and you need to make deals happen with your own reputation and your own name. And that's a difficult trick. One day we were negotiating a deal with the Japanese, and we were at a stalemate, and he said, I'm going to go have lunch with Yoshi. I said, he's in Tokyo. He said, exactly, I'll be back tomorrow. And he left, and he got the deal done. And that taught me how this industry works. It also taught me that the real money made in this business is not having a room full of hundreds of people chartering ships and running vessels around the world. The real money made in this business is in buying and selling ships at the right time. So then I figured I better find some money, like a lot of money, because ships cost a lot of money. And I heard about this thing called private equity. And the question, we hear a lot about private equity, and again, I don't know how much you guys know about the finance world, but what is private equity is a good question. And in its most fundamental form, private equity is any kind of equity that's not a publicly listed company. For the purposes of most of the world, private equity are actually companies, big investment houses, run by people like KKR, Blackstone, Apollo, or Carlyle. And these groups are hundreds of billions of dollars. And Carlyle and Blackstone and Apollo aren't just big sinkholes of cash. They set up individual funds. They have many, many funds over the years. And Mr. Blackstone will go out and say, we want to raise $10 billion for energy. And he'll go to pension funds and endowments and high net worth individuals, and they'll say, we're going to do this energy fund. You want to put some money in. And the people at the top, they're in the business of putting money to work. So those are the people you want. When you need money, you want people who are in the business of putting money to work. So Blackstone and Apollo and Carlyle have a business of raising these funds. And it's almost like a machine. The same people give the same money all the time. So Blackstone or KKR says, we're going to do $10 billion, and we'll put up 2% of that. And it's actually the partners in Blackstone who put the money up. And they say, okay, we'll give you some money. And they say, we'll invest this in energy. And Blackstone charges them a 2% fee every year. So they have to put $200 million in, and they get paid $200 million a year, which sounds like a great deal. They also get a chunk of the profits, and it's called a carry. And this is an important aspect. These funds last 10 years, and Blackstone will get 20% of the profits over an 8% preferred return, or a hurdle rate of 8%. So if these are in high-tech sectors, that can go through the roof. In energy, not as much, but it can still be a huge amount of cash. And this carried interest is where all the juice is. In the meantime, Blackstone has hundreds and hundreds and billions of dollars of fees feeding this monster group of people who go out and find deals and administer them over time. So this whole thing is like a machine. And the funds invest in anywhere from 10 to 20 to 30 different companies because they have to diversify themselves. So I need to find Mr. Private Equity who's doing an energy fund who wants to invest in shipping. So that's my goal. As you can see, well, the portfolio companies I'll talk about in a minute, but they have a similar risk-reward system that goes up the chain. And the whole concept is to incentivize everybody to make a lot of money, get paid a few bucks in the meantime, and then sell the assets and push the money back up to the people at the top who control the cash flow. Any questions? Anyone? Anyone? No? Okay. All these slides aren't this slow, but the first one is. So when I talk about shipping, I'm really talking about bulk shipping, tankers and dry cargo ships. Containers a little bit, but mostly tankers. That's my business. When I look at the nature of tankers, let me tell you a bit about the market. As we discussed earlier, it's highly fragmented. And who are these owners? They're all over the world. Greeks, Norwegians, Danes, a lot of individuals, a lot of closely controlled private companies, some funds, Apollo, some private equity, some tax partnerships. So these are the characters in my business. And there's this whole liquidity scenario going beneath the surface. The transactions are sort of lubricated by brokers who know what everyone's doing and try to buy and sell assets and tell Paulo and I, okay, they'll tell me Paulo's trying to sell this or that guy's trying to sell that. So it's a very liquid market of assets. Somewhere around 1,400 ships a year are sold. So there are several a day that are sold, and these assets are anything from $10 million to $50 million. So there are a lot of transactions. There's no clearinghouse. So it's all by, not word of mouth, but it's all by personal relationships and brokerages that facilitate these transactions. So my challenge when I go to private equity is, will you give me some money? So I sit down with a bunch of people, not much older than you, who are all way smarter than me, and I pitch my deal. And I say, you guys should invest in shipping. And they say, why? How much does this business make? And the truth is, it doesn't make a lot of money. Shipping makes 8 or 9% a year, which is pretty dismal when you think about all the risks involved. There are operational risks. Ships can sink, they can have an accident, whatever. There's a credit risk. It's personnel intensive. Things can go sideways there. There are huge cycles. It's capital intensive. But the important thing for PE is they'll say to me, well, where's the juice? Where's my competitive advantage? You buy these ships, how are you going to make this better? How are you going to get above the mark? And I don't have an answer because at the end of the day, shipping is extremely commodity priced. As a ship owner, we're price takers. I can't go to a charter and say, I want a premium for my extra good ship. He's going, I don't care. I want stuff moved from A to B. I'm paying so much per ton. I don't care who you are. That's what you're going to get. So PE hates this. They want to feel that they're really smart and really good and can take an undervalued company and change the management or consolidate it or put some special sauce in there, and they're smarter than the rest of the world, and then sell it 6 years later. That doesn't happen in our business. And they say to me, okay, instead of giving you the money, I'll put it in the capital markets. This may not be true today or this week, but generally capital markets make 8 or 9% over like 50 years. So, and there's a lot more liquidity, a lot less risk, a lot easier to buy and sell. They don't have to share their profits with anybody. There are no leaks, no crashes. So this took me some time to figure out. But the answer itself is in the problem. The answer is how we take advantage of the market dynamics. So the PE guys say to me, either the returns should be higher in your business or we're missing something. But the returns are what they are. And you can't change that. You can't argue against it. You can't say I'll get a higher return over time. So as you can see, the volatility here, I would call extreme. These are charter rates per day for various ship types. And you guys are a lot, and I mean this, a lot smarter than me in math. And so you deal with a lot of graphs. The volatility, I think, is understated in this graph because of the scale on the left. A rate from 20,000 that jumps up to 80,000 is obviously a 4x. And that sort of volatility is underwhelmed by the extreme spikes that happen. Now, a lot of smart people own ships, and they're constantly projecting what's going to happen. The information is perfect to go out and assess supply, demand, ton miles. So why the volatility? The only reason there's volatility is when an event happens, when there's a sudden recession, when COVID hits, when the Ukrainian war hit, and suddenly the transportation of oil got dispersed all over the place. Demand for tankers went through the roof. Tankers and bulkers, they earn their money in the spot market, and they're priced like imagine Uber with complete demand pricing. You can charge whatever you want. So if you're the only Uber at the airport when it's pouring rain out, and you can charge $1,000, someone's going to pay you $1,000 to get to New York. If there are 50 Ubers at the airport and it's sunny out, you'll be lucky to get gas money to get back to the city. That's how tankers are priced. So when there's disruption, rates go through the roof. Everyone knows who needs what. Everyone knows how many cargoes are out there. And instead of demanding $10,000 a day, suddenly you realize you can get $100,000 a day. And that's when the fun starts. Unfortunately, there are long periods of not so much fun. So I look at the volatility. Okay, that's time chart. That's earnings. Now, as you may have guessed, the values of the ships track the earnings. And as you can see by this green and red line, sometimes that turns around very quickly. So this is not a buying opportunity. You know, down here is obviously the buying opportunity. So this is a really hard market to invest in. So my job is to convince my investors that we can outsmart this, or we can take advantage of it, not outsmart it. The next thing we looked at is when should we buy? How old are the ships we should buy? Now, private equity, those guys, they think they're really smart, and some of them are. But for a long time, for many years, they bought brand new assets. And their strategy was, we can go to Korea, we can hammer down the prices if we buy 10 ships, we get brand new ships, they're going to last a long time, we'll go public, we'll get higher prices for our cargoes. None of that was wrong. None of that was right. It was completely wrong, and they lost a lot of money. And they hated old ships. But I like old ships, because they make the most. Like I said, the taxi cab example, or the Uber example, if it's pouring rain out, you're going to just get the oldest, rustiest taxi to get you back to the city. If it's sunny out, you'll take a new one. So what I want to do is have a whole bunch of older ships that when people need them, they'll pay whatever they have to get hold of them. So that's our strategy. If you look at the volatility, the best upside is in the oldest ships that are 15 years old. So the question becomes, when do you buy a ship, at what age point? And I said there's a lot of liquidity before, but it's not 100% liquidity. You can't just put an order in for a 15 or 13 or 12-year-old ship. You need an actual asset. And that's my job, is to find the right asset from the right owner who's taking care of it for a long period of time. And what we found is 12, 13-year-old ships probably give you the right amount of optionality time. You have 6, 7, 8 years, and they take advantage of the volatility. And you want to have a lot of entry points. So it's a trade-off between the volatility and how long you can own the ship for. And there's always friction in buying and selling assets. It takes time, it takes fees, it takes money. It's not seamless. So we decided, actually between 10 and 15 years is where we want to buy ships, which is what we say here, sweet spot. This is remaining life. It's not age of the ship. That's the remaining life, between 5 and 10 years. So what I'm trying to show you here is how ships are valued. And like everything else in the world, assets are valued on their cash flow going forward, what you guess it's going to be. Now, everyone has a pretty good view of the next 2 years, or they think they do. So when the market takes off, if you have a brand new ship with 20 years ahead of it, everyone's going to say, we're making a lot of money the next 2 years, so we'll add that at a discount rate that's low. And then the next 18 years, that cash flow we're going to discount at 8%. So the spike isn't worth that much compared to the value of the asset. If you have a ship that's about to go to the scrapyard and the next day the rates go through the roof, you've really made a lot of money. So if you look at 10 to 15-year-old ships, a larger portion of their value is based on the next 2 years, which is fairly simple. So they have the most volatility and the most upside. So our investment strategy, how do we turn this into money for Bob and his friends? So part of this is easy to say, harder to do. Buy when the market is low. It's hard to buy when the market's low. Who bought stocks this morning? Anyone? Okay. Good job. I didn't.
We talked about it in the car.
Yeah, we talked about it in the car. Yeah, we missed it. It's hard to buy when things are cheap, and it takes a lot of guts. And then buy medium-aged assets. Not only hard to buy, it's hard to convince other people to give you their money to buy old assets when the market's really bad. That's the key. It's really hard. And the hardest thing for me to do is to sell. Punch out when things are really good. But you have to do it. So we look for what I call asymmetrical upside. When the market's really, really low, and volatility is you're in a volatile business. So when the market's low, volatility is your friend. And when the market's high, like the asset values are high now, volatility is your enemy because there's only one way to go. Or it's asymmetrical to the downside. All right, so how do I make money? Me and my friends. When you go to Mr. PE, they say, okay, we're going to believe you that this is going to work, blah, blah, blah. So how are we going to do a deal here? They're going to figure out more or less what the management team is worth. They don't actually say, what are you worth? Actually, I'm going to use the word kid. One kid did ask me that. And I knew he wasn't going to invest. And I told him, I don't tell my dad what I'm worth. And if you want to write a check, we'll discuss it. But they figure out more or less what they want you to put in. And that is a function of what you're worth and where you are in the group. So the top couple, 3 guys have to put a lot of money in, millions of dollars. And then the junior guys, something less. But it has to be an amount that's important to your life. And then you manage the company as a full-time job. They don't want you, bartending at night or something else. So it's a full-time job and no other conflicts. And the third thing is you get a reasonably good salary and benefits and the rest of this, but not enough to make you rich. So we agree on the fees and how much I'm going to put in and the rest of this. And then I also get a carry, or my management team does. And this is the exciting part. So as much as Mr. KKR gets a carry from their investors up at the pension fund level, we get options or a carry at our level. And that carry, for example, and this is a lot of words on this page, I know, but I figure you guys can handle it. If we do a $100 million deal and it earns 20% in a year, or $20 million, well, the management team, let's say we put in 2% of the money, $2 million, we make 20% of that, $400,000. No great quantum of money for all the work that was done. And then we also get 20% of the profits over a preferred return, or in this case, $2.4 million. So we end up with $2.8 million, or 140% return on our investment. In practice, the deals last for a lot longer because the actual work of buying ships and putting money to work is a lot of work. But sometimes it just goes through the roof and you just have to sell because it doubles or triples in a year. Like the Suezmaxes that Paolo bought for me. So this carry can be really, really valuable or not. And since every event is completely unpredictable and returns are generally pretty dismal, most of the deals will be okay. So this is an example. We bought 4 VLCCs in a pretty good market, and then the market fell out from under us. They were older ships. We held the deal for, I think, 5 years, and then we sold the assets. So the investors got 6%, and that's okay. One thing about taking people's money, if you make 5-6%, they're like, all right, that's okay, maybe we'll do something else. If you lose 5%, they'll never talk to you again. If you make 5 or 10%, there's not that much of a difference. It's the same mathematical difference as between, 4 and 9, but between 4 and -1 is huge. They don't like losing money. So that's why we buy all the ships with the underwriting case. They'll most likely get their cash back. So that was all right. We made some fees, paid the rent, all the rest of that. Everyone got their money back and lived to fight another day. Now, we bought some MRs right before the Ukrainian war. We didn't predict the war. We bought 8 of them. And there were 2 companies merging, 2 big companies. And I knew the CEOs. I said, we did our numbers. We weren't this rude. You're going to run out of money. And I said, I'll tell you what. We'll take 6 of those from you guys, and we'll close a week after you close your big deal and just offload some of your assets. We'll be your backstop so you have some cash. So they sold us 6 MRs, and we took 2 MRs from somebody else. We had 8 of them. And we paid $10 million each for them. And it was a really, really, really tight deal. Didn't make a lot of money. We just wanted to get something on the board. So 30 seconds later, Russia invaded Ukraine, and the entire oil transportation system went haywire. All the oil out of Russia that used to go to the Mediterranean starts moving to China and India, which is further away. And all the oil that went to the Mediterranean came from the US and the Mideast, which is further away. So the demand for tankers went through the roof. And ships that were making $10,000, $12,000 a day were suddenly making $50,000, $60,000, $70,000. And these were old ships. So we were making 0 EBITDA for a couple of months, and suddenly we were making close to $1 million a ship every month. And the value of the ships went from $10 to $20 million. So we sold pretty quickly. We held them better part of a year and sold them all. And the first example, you see the carry equals 0, not a good outcome. On the other side, the carry was 13 times our original investment. And under a deal that could have gone the other way if an event didn't happen. And this carry is put all throughout the organization. We only have 14 people. We have our technical management we outsource, just like you would outsource your technical management in the building to Cushman Wakefield. And the commercial management we pay for somebody else. We have a naval architect, but from Genoa. Sorry. So, as a strategy, we bet on numerous random events at different entry points. We leverage to the upside, which is our carry. We have operational leverage, which is operational leverage means if we double our assets, we have no incremental costs, as opposed to like building widgets, and you double your revenues and your costs may go up proportionally because each widget costs something to make, and shipping the incremental dollar costs you nothing. So that's called operational leverage. Make sure you pay to hang around, you get some salary and some money for beer and chips, and then have discipline to sell, don't get greedy. One more graph, and then we're through this. So this is what we've done over the past 12 years. We bought a lot of different entry points, and most of them were okay, and we made a few bucks. For 2 of them, we did really well, but the others were okay, and that's the whole strategy. People ask me, when do you know when to sell? And that's an easy question, because when you sell, you sort of lose your job. So you want to sell. I want to sell when I get home and tell my wife, I've lost my job, but I made this much money. I don't want to go home and say I lost my job and I made this much money, because that doesn't make any sense. And that's why PE structures it this way. They give you a salary and benefits that don't make you rich, but they give you the upside that can really set you up for the next deal. So it takes some discipline to sell, and it takes a real sales pitch to convince people to hand their money over. And all this looks great in retrospect. Wow, that's super. I did a deal in 2007, and I sold in 2008, and the investors tripled their money. It was phenomenal. And then the world went to hell, 6 minutes later, in the second half of 2008. And I came home and I told my wife we're going to sell, and she said, I have a couple questions. How long are you going to be home for? And how long do the benefits last? The health benefits. How long you be home for was important because, they say for better or worse, but not for lunch. And I had been through this before. I said, I'm going back to work soon, honey, don't worry. And of course, the world fell apart, and I didn't get money again until 2012. And I probably approached well over 100 people looking for money, which is a lot of rejection, a lot of pitching, a lot of listening, because I say these guys, are the smartest guys in the room. They're smart, and they all have a little something to add to you. But it is a lot of work to raise money, and that's the hardest part. And it is hard. That's why it's hard to sell, because you give that money back, and you have to do it all over again. But that's the business I'm in, and so far it's worked out fairly well. That's all I got, guys.